Good morning. We're now moving on to Note 4, which covers sole proprietorships and franchises. And I'm going to split this into two segments. So, part one will deal with sole proprietorships, and then part two will deal with franchises. A sole proprietorship is the simplest form of business organization that exists in our system, and it is basically just an individual setting up a business, into business to practice a trade, to provide services, to buy and sell goods, whatever it is that they may be doing, and doing it as an individual. The benefits of this is that there is no cost involved, there are no filing fees, there is no paperwork to be drawn up. You just basically begin doing your trade, doing whatever it is that you wish to do to make money, and you do it. There is no legal reality here. We call it a sole proprietorship, but it is not really a form of organization because in reality, the individual owner is the business and the business is the owner. There's no legal separation or distinction between the two. Now, having said that there's no requirement for any type of filing or paperwork or whatever, one always has to be careful because if you're trying to work in an area where licensing is required by either the state or federal government, even as an individual, you must have the license that applies to that particular trade or business. So a sole practicing attorney can put up a sign, set up a phone number, go on the internet and say, "Hi, I'm a lawyer and I am here to give you legal services." They can act as a sole proprietor, but they have to have passed the bar and they have to have their license to practice law. There are hundreds of trades and professions which today require licensing by the state and or federal government. Plumbers, carpenters, electricians, doctors, dentists, lawyers, hairdressers, cosmetologists, the list goes on and on and on. So one of the things that we always have to tell a client if they're coming to us talking about setting up a business is to check. Go online and check with your state authorities, check with the federal authorities to make sure that you have the right licensing in place to be able to set up this business. Now, one of the or some of the advantages of being a sole proprietor are, number one, you have full control. As the owner, you are it. You are the business. You make all decisions. You decide what's going to happen and not happen in the business. Now, that doesn't mean that you have to do all the work. Sole proprietors can hire employees. So as a sole proprietor, you could pay other people either by salary, commission, or hourly wage to work for you and to perform certain tasks and duties for you. There are some dangers and pitfalls to doing that as a sole proprietor, however, but it is possible. The reality is, though, that no matter how many people you have working for you as a sole proprietor, you are in control. You are the business. Flexibility is great in a sole proprietorship because you are in control. If you decide to change course, do something else, stop doing this, begin a new project, it is totally up to the owner to decide how that's going to happen and what's going to happen. There are no secondary folks involved, such as shareholders with a corporation or the other partners in a partnership, where you would have to go and get their consent or their permission to make certain types of changes. There is no double taxation. And we'll talk about double taxation more as we get into the corporate structure and explain how that works in detail. But to put it simply here, in the United States, under our tax structure, certain types of corporations end up paying taxes at two different points along their revenue stream. And the accountants and the lawyers have happily nicknamed this double taxation. The reason for this is that under the U.S. tax code, every corporation that falls within these provisions has to once a year do an accounting. And in that accounting, they will look at all the money they've brought in, they'll look at all the expenses that they have had to pay, and if they come up with a profit, the IRS and the federal tax code says that that profit is income, and that profit is taxed at the corporate tax rate, and the corporation must send a check off to the federal government. And in many states, the states have income taxes, corporate income taxes. They also have to send a check off to the state government. Now, Once that is done, whatever money remains, the net profits, if there are shareholders in this corporation, very often the shareholders will receive part of those profits by way of what we call dividends. Part of the reasons for owning shares of stock are not just to watch the shares of stock gain in value, so you buy them hoping they will go up and you can sell them for more money at a later date, which seems to be the main reason why people are buying stocks lately. But the other reason for owning shares of stock is that large corporations pay dividends. They share their profits with the shareholders. As a matter of fact, originally, that's why corporations were established. So periodically, corporations will do their books, will find out that they have a profit, and they'll take all or part of that profit, and they will issue money out to the shareholders in something called a dividend. Well, the federal government and the tax code say that when the shareholders receive that dividend, that is income to the shareholder. Now remember, the corporation already paid taxes on this money because it was part of the corporate profits that are taxed. And now when we take it out of the corporate books and we send out checks to the shareholders have to add that to their income and they end up paying income tax. With a sole proprietorship, you avoid that. There is only taxation on the individual owner. There's no two-step process to taxes, which is something that, along with no filing fees, it makes it very, very interesting for a number of individuals to say, well, maybe I will stay a sole proprietorship rather than getting involved in corporate structure and some other things. But we'll see that not every corporation has to have the type of structure where they are doubly taxed. And a matter of fact, the trend has been in the most recent years to create newer and newer structures that allow you to have the protections of a corporation without suffering from double taxation. But we'll get into that in the later chapters. Corporations and partnerships require paperwork. They require usually a certain type of formality, although we've seen in D'Agostino, the case that we briefed first, that you don't have to call a partnership or have a partnership agreement to create a partnership. And as a matter of fact, one of the reasons why I keep saying that a sole proprietorship is the owner and only the owner is that the minute you take on somebody else to make decisions with you, to work with you, to be intimately involved in the business, whether you call it that or not, whether you do the paperwork or not, you have de facto created a partnership. You have moved from being a sole proprietor to becoming a partner with somebody else. So in the legal world, sole proprietorships are just that. They are individuals. If you take on a second individual to help you run the business in anything higher than the level of employee, you now have, maybe without knowing it, created a partnership. There are filing fees. There's paperwork that must be filed. There are annual reports that must be filed for corporations. In many places, such as Rhode Island, there are minimum corporate taxes, so that above the corporate income tax, there's a minimum tax you pay to the state just for being a corporation. There are separate tax filings that must be made for a partnership and for a corporation, above and beyond what the individuals file. In a sole proprietorship, there are additional pages that would be added to your individual return, but you don't have to hire an accountant to file a wholly separate tax return as you do with a corporation or with a partnership. Those are the advantages. There are some serious disadvantages to having a sole proprietorship. First and foremost is that you are the business and the business is you. There is no ability to have continuity. There's no ability to carry on beyond the individual owners becoming sick or dying. We'll find out when we get into partnerships. There are mechanisms, although a partnership is legally deemed to end when a partner withdraws or dies, there are mechanisms for other partners to pick up and keep on going. And certainly with a corporation, the existence of the corporation does not depend on the lives of the individual shareholders or on their active participation, so that a corporation can continue to function and continue to move along even though key people have become ill or withdraw or die. With a sole proprietorship, this is not true. If the sole proprietorship withdraws, dies, becomes ill, that is the end of the business. You may sell it to someone else who will pick it up and run with it, but that has, by law, starting a new business. The sole proprietorship is tied into the individual. This also becomes difficult in that it's very difficult to get away from a sole proprietorship and have any time free, any time off, any type of quality vacation. If you talk to a sole proprietor with a good going business, one of the things you'll hear is that it's a 24/7, 365 job, that you're just constantly on call for your business, and that even if you try to get away today with cell phones and texting and all other types of communication, you never really get away. All decisions have to come back to you. All major purchases have to come back to you. All problems with customers come back to you. And one of the difficult things with the sole proprietorship, even if you have some employees, it's very difficult to get away from that. Because of the nature and the structure and the responsibility of things. You are it is you, and it follows you everywhere you go, every moment that you're breathing. Hey, there are tremendous issues concerning liability with sole proprietorships, and that is liability for debts and also liability for torts. As a sole proprietor, you are deemed to be the borrower for any money that the business utilizes, whether that be through bank loans or auto loans or credit cards or buying goods and services on time where you have agreed to pay at some point in the future. All of those expenses, all of those bills, all of those debts are the debts of the individual owner. There is no way of separating the owner from them, and if the business is not operating at a level to pay them, then the assets of the owner, even those that are not involved in the business, like their house, their car, their certain types of their investments, are all in line to be taken and seized to satisfy any judgment that would happen if they were sued for not paying their debts. Probably even more problematic and more difficult than that is a business owner is responsible through the idea of vicarious liability for anything that any employee does, whether it be negligent or some type of fraud or some type of breach of contract that the employee engages in on behalf of the business. The sole proprietor is responsible and legally liable for that. And again, they can go back into the private assets, not part of the business of the sole proprietor, to seek damages and to seek remuneration for anything that they can prove is owed. In dealing with employees, it's a very, very tricky adventure to be a sole proprietor. Every state that I know of has workers' compensation laws. And these laws basically say that if an employee is injured, even because of their own negligence or stupidity while on the job, the employer is responsible to pay for their injuries and even to provide for lost wages, lost income. This can become a tremendous burden. It can be something that the employer could end up being responsible for the rest of the employee's life. And as a sole proprietor, again, that falls directly to you, and any assets that you have even outside the business can be dragged in to pay for workers' compensation items. Now, most businesses buy insurance, workers' compensation insurance, to try and cover these things, but there are still times when the insurance is not enough, and then the employer would be liable for anything that comes up by way of making the employee whole. And as we said, with the sole proprietor is responsible for that, and their private assets apart from the business are responsible for that. Sole proprietorships are usually the vehicles utilized by small business people when they are first beginning, because they really don't have the time or the money to jump through all the hoops to set up a proper partnership or to set up a corporation. And it's something that they very often, when I talk to clients who are starting new businesses, I try to twist their arms to set up some kind of a corporate structure, but very often they just don't want to be involved at the beginning. But as time goes on and the business begins to pick up steam, most sole proprietorships are mutated into corporations at some point in time, that we will now take the business assets and we'll set up a corporation, and the sole proprietor will sign the business assets and the ongoing contracts to the new corporation, and then we pick up a corporate structure or sometimes a partnership structure if we find somebody to come in and work with us on it and go from there. But because the reality is that it is easier to just start a business without worrying about all this, particularly in the beginning when you can't afford to pay accountants and lawyers, there are still a multitude of sole proprietorships that exist across the country. You need to realize that if you engage in a business activity, and this becomes very perilous at the moment, because there are all kinds of platforms such as eBay, and I'm not saying these are bad things, I think they're actually wonderful things, but there are many types of platforms where you can buy and sell services and goods online. And I would venture to say that even though you may not think of yourself in business, if on a regular basis you're going on eBay and you are selling items, or if you're going on eBay or Angie's List or some of the other platforms that exist, and there are many of them, you have created a business and you are in effect a sole proprietor. So that all these rules, all the different things we've talked about here, apply to you when you may not even realize that. Watching on Facebook from time to time and watching on eBay from time to time, it seems there are millions of people out there in the electronic marketplace selling goods, selling ideas, selling services, and they're doing it from their dens, they're doing it part-time, and I often wonder if many of them realize that they are, in effect, they are conducting a business, and once they put themselves out on the internet, hold themselves out as a seller of goods and services, they are, in effect, a sole proprietor. That's about all that I want to say to that. We'll go on. The next video we'll talk about franchises, so that will be part 2 for Note 4. We will see you there.